Hello traders, my name is Ksenia Medic, and today in this video I'm gonna tell you about a golden cross. This is one of the oldest but really useful forex signals. Simply it's intersection of two moving averages, one with a smaller period, let's say it will be 50, and one with a high period, let's say it will be 200. Feel free to use other periods and other time frames, but remember that one should be smaller than the other one. So, as you can see, 50 moving averages crosses 200 moving averages bottom up, and this will be a signal to buy, or as traders say, go long. Also, it may happen a dead cross on the market. It will be quite the opposite situation when the moving averages with the smaller period crosses the moving average of the high period upside down, and it will be a signal to sell or go short. These signals are really strong, but you should remember that you should use several signals for confirmation. That was all. Thank you for watching us. Try it in your trading.
Stay tuned for other titles in this series. They're on the way.